Hi everybody. Everyone has a doubt when it comes to investing. How come some are able to make money and some lose? The stream of video is related to explain what is meant by fundamental analysis, which could be helpful in assisting the strategies to make money. Fundamental analysis is a holistic approach to study a business. When an investor wishes to invest in a business for a long term, say 3 to 5 years, it becomes essential to understand the business from various perspectives. It is critical for an investor to separate the daily short-term noise in the stock prices and concentrate on the underlying business performance. Over the long term, a fundamentally strong company's stock prices tend to appreciate, thereby creating wealth for its investors. We have many such examples in the Indian market. To name a few, one can think of companies such as Infosys Limited, TCS Limited, Page Industries, Eicher Motors, Bosch India, Nestle India, TTK Prestige, etc. Each of these companies has delivered an average performance of over 20% compounded annual growth return, that is CAGR, year on year for over 10 years. At a 20% CAGR, the investor would double his money in roughly about 3.5 years. To give you a perspective. Higher the CAGR, faster is the wealth creation process. Some companies such as Bosch India Limited have delivered close to 30% CAGR. Therefore, you can imagine the magnitude and the speed at which wealth is created if one would invest in fundamentally strong companies. Here are the long-term charts of Eicher Motors and Tech Mahindra that can set you think about a long-term wealth creation. Do remember, these are just two examples amongst the many that you may find in the Indian markets. Fundamentals of Eicher is so strong that it provided more than 100% of return from the year 2015 to 2023. If we extend further, Eicher is a stock which was trading in less than rupees 10 in 2010 and now trading at a market price of rupees 3,300. Fundamentals of Tech Mahindra is also so strong that it has provided more than 100% return from the year 2015 to 2023. If we extend further, the stock which was trading in less than 250 in the year 2010 is now trading at a market price of rupees 1,200. At this point, you may be thinking that I am biased and I am selectively posting charts that look impressive. You may wonder how the long-term charts of companies such as Reliance Power and the Yes Bank may look. Well, here are the long-term charts of these companies. Reliance Power was considered as one of the best company to be in the future, had a big impact when they came for IPO. Since the fundamental of the company was weak, the stock was never doing better. From the listing price of rupees 250 approximately, it is not trading at rupees 20. Similarly, Yes Bank, which was considered as one of the best company to be in the future, ran into trouble due to the scam by the promoters. Since the fundamental of the company was weak, the stock was never doing better. From a peak of rupees 350 in 2018, now it is trading at around rupees 17. These are just two examples of the wealth destructors amongst many of the one you may find in the Indian markets. The trick has always been to separate the investment grade companies which create wealth from the companies that destroy the wealth. All investment grade companies have a few common attributes that set them apart. Likewise, all wealth destructors have a few common traits which are clearly visible to an astute investor. Fundamental analysis is the technique that gives you the conviction to invest for a long term by helping you identify these attributes of the wealth creating companies. It is the examination of various factors such as earnings of the company, growth rate, and the risk exposure that affects the value of shares of a company. Fundamental analysis consists of three analyses, say economic analysis, industry analysis, and company analysis. Economic analysis is the analysis of various macroeconomic factors that have a significant bearing on the stock market. There are various macroeconomic factors of which some are gross domestic product, that is GDP, savings and investment, inflation, interest rate, budget, and the tax structure, followed by industry analysis. Industry analysis is used to analyze the performance of the industry over the years. An industry is a group of firms that are engaged in the similar product or the production of similar goods and services. Industries can be classified into growth industry. Growth industry has high rate of earnings and the growth is independent of the business cycle. Cyclical industry. Growth and profitability of the industry move along with the business cycle. Defensive industry. It is an industry which defies the business cycle. Cyclical growth industry. It is an industry that is cyclical and at the same time growing. An investor must analyze many factors. Some are growth of the industry, cost structure and profitability, nature of the product, nature of the competition, and government policy. In company analysis, the growth of the company is analyzed by the investor so that the present and future value of the shares can be known. The present and future value of the shares is affected by many factors. Some are competitive edge of the company, market share, growth of sales, and stability of the sales. So learners, we had just moved a step into knowing what is meant by fundamentals. Let us continue our discussion with a stream of videos. Thank you for watching.